Well, let us go to your stock pick for today. Where are you seeing opportunity, Yatheen?
So, in light of South African long bond yields trudging lower and earnings growth remaining fairly broadly positive within the SA banking space and within the SA rate sensitive space as a general. Because if you look at the earnings yield of rate sensitive SA stocks, these tend to follow bond yields to a fairly strong correlation and degree. So my stock for the day is actually Absa Group. And if I can just chat quickly to the key themes in the banking sector. So we're currently seeing easing in credit loss ratios within the cycle. And obviously, this is Absa, Nedbank, Standard Bank, and FirstRand ex Capitec. The credit loss ratios there are currently at through the cycle targets. So that's fairly positive. We're seeing a very sustainable pace of deliberate moderation within those credit loss ratios. We are seeing non-interest revenue growth continue to show its resilience, mostly on the back of improvement in asset quality. We're also seeing net interest income coming under slightly less pressure, and to a large extent that actually speaks to our investment case on Absa because of their structural hedge, which I'll touch on just now. We've also seen slower loan growth and more competitive pricing within the environment because obviously there's a material lack of new investment money flow within our market at current times. It's more cannibalization. And if one has to look at Absa specifically, year to date, they have benefited from a 33.9% appreciation in the Ghanaian cedi against the ZAR. And we know that Ghana, contributes approximately 7% towards Absa's group profit. So that makes the currency gain materially more impactful. The group also has a structural hedge in place, and this does offer a fair degree of protection against easing interest rates. So if it is our view, if we are to see a GDP growth shoot past that that downwardly revised 0.7% target, which would obviously warrant a more aggressive pace of interest rate cuts locally, we would see Absa on book and academically actually gain to benefit over its peers from that perspective. And, it's currently trading at a forward PE of about 5.8 times. So it does suggest a potential more material valuation upside and a more premium valuation tag than what it's currently trading on.
All right. Well, thank you so much for your time and for your insights on what has been moving in investors' money today. I think really appreciated. That was Yatheen Singh from Momentum Securities.